the top 5 stocks in Stanley Druckenmiller's portfolio. Hey everyone, welcome back to our channel where we discuss everything about finance and investing. Today we're going to talk about Stanley Druckenmiller. Investors have long admired Stanley Druckenmiller for his successful investments, and many have looked to him for insight into what stocks to buy. In this video, we'll take a look at the top 5 stocks in Stanley Druckenmiller's holdings and discuss why they may be beneficial investments for you. Before we continue, make sure you like, comment, and subscribe to stay up to date on our future videos. Number 5. Coming in at number 5, T-Mobile US Inc. T-Mobile US Inc. NASDAQ TMUS. T-Mobile US Inc. is a leading global wireless telecommunications provider that serves more than 8 million customers in the United States and Puerto Rico. Stanley Druckenmiller has included T-Mobile in his portfolio since April 2020, when the company announced its merger with Sprint. After selling off a quarter of his T-Mobile US Inc. holdings during Q2 2022, Druckenmiller was adding to the position in Q3, raising it by 7% to 719,017 shares. Hedge fund ownership of T-Mobile has remained steady for over 2 years, with the stock hovering around the 30 most popular stocks among hedge funds throughout that time. Investors have welcomed the merger of T-Mobile and Sprint, which will create a larger and stronger carrier capable of taking on the 2 biggest players in the industry, Verizon and AT&T. The new company is also expected to introduce a faster 5G network and additional services, such as advanced home internet access. The combined company will be able to leverage its strengths to offer better service and prices to customers. T-Mobile US Inc. is one of the rare large-cap stocks having a banner year, being up by 31% year-to-date as its costly integration with Sprint nears its conclusion, and the fruits of that deal begin to sweeten. T-Mobile US Inc. is prepared to aggressively redeploy its growing wealth to shareholders, telling investors that it plans to spend $60 billion their way between 2023 and 2025, given that about half of its shares are held by Deutsche Telekom AG and SoftBank and are essentially off the market. That buyback initiative could have an even more significant impact on the company's share price than it otherwise might. Number 4. Chevron Corporation, NYSE CVX. Chevron is an integrated energy company with operations in more than 180 countries worldwide. It focuses on the exploration and production, refining, marketing, and transportation of oil and gas products with 68 hedge fund shareholders. Chevron has a broad product portfolio that includes traditional and alternative energy sources, such as oil, gas, renewable energy, petrochemicals, and lubricants. Its wide array of products and services makes it one of the largest integrated oil companies in the world. It is also a global leader in developing and producing advanced technologies to produce more efficient, cleaner, and safer energy solutions. Chevron Corporation is another stock that did well in 2022, gaining 46%, so it's not surprising to see Druckenmiller do some profit taking from the holding. As a part of Druckenmiller's portfolio, Druckenmiller cut his stake in Chevron Corporation, NYSE CVX, by 17% during Q3. One of only 2 positions in his top 10 whose size was lower during the quarter. His family office owned 690,295 CVX shares on September 30th, 2022. Hedge fund ownership of CVX has risen during 5 of the last quarters to hit an all-time high on September 30th. Chevron's free cash flow ballooned at $29 million during the first 9 months of 2022, more than double what it earned during the corresponding period of 2021. Number 3. Amazon Inc. NASDAQ AMZN. Amazon is an American technology giant and one of the largest online retailers in the world. It offers a wide range of products and services, from books and movies to home appliances and more. Amazon has been growing steadily over the years, thanks to its focus on customer experience, innovative technology, and low pricing. Amazon.com Inc. was another new addition to Druckenmiller's 13F portfolio during Q3 2022, with the money manager taking advantage of weakness in the stock to build a position of 906,250 shares. Amazon shares have lost 48% of their value over the last year and have continued to sink in Q4, dropping another 17%. It could be said that Druckenmiller traded Microsoft primarily for another AI and cloud powerhouse in Amazon.com, as he sold off about $120 million worth of MSFT shares and spent most of those proceedings building a large Amazon position. Investors have fled Amazon shares due in part to the company's plunge from profitability in 2021 back to a loss in 2022. Weakening demand in 2022, coupled with the company's exuberant growth initiatives during the pandemic boom, led to some overcapacity that Amazon is now in the process of correcting. The company is slashing as many as 20,000 jobs in a bid to return to profitability in 2023. Number 2. Eli Lilly and Company, NYSE LLY. Eli Lilly and Company is an American pharmaceutical company that was founded in 1876. It's one of the largest drug manufacturers in the world and has a strong presence in the United States and Europe. Stanley Druckenmiller has been investing in Eli Lilly since 2007 when he added it to his portfolio. Stanley Druckenmiller's position in Lilly is currently worth $244 million. That's 11.64% of their entire equity portfolio. Druckenmiller's stake in Eli Lilly and Company was raised by 64% during Q3, hitting 484,895 shares by the end of the quarter. The investing icon first added LLY to his family's Office 13F portfolio during Q2, a quarter in which there was a huge jump in hedge fund ownership of the stock. The bigger push into Eli Lilly and Company is paying off for Druckenmiller, as the stock has gained 14% in Q4 to push its year-to-date gains to 36%. Eli Lilly's growth isn't particularly exciting, as the company grew revenue by just 2% to $6.9 billion during Q3. Eli Lilly has a diversified portfolio of products, ranging from treatments for diabetes, cancer, and other serious illnesses, to animal health and biosimilars. They are also actively involved in the development of new drugs through their pipeline of research products. The ClearBridge Global Growth Strategy believes investors are undervaluing the market potential that Eli Lilly and Company's diabetes drugs like Mounjaro have, as it discussed in its Q3 2022 investor letter. And at number 1, Cpng Inc., NYSE Cpng. Stanley Druckenmiller's top stock for the 7th straight quarter is Cpng Inc., of which his family office owns 19.4 million shares of. At 18.4%, Druckenmiller's firm has more than twice the 13F exposure to Cpng as it has to any other stock. It's also the most exposure it has to the stock since the 4th quarter of 2021. Stanley Druckenmiller has placed a substantial amount of his portfolio in Cpng Inc. The South Korean e-commerce giant is the largest online retailer in the country and was founded by Bom Kim back in 2010. The company has grown to an incredible rate and now serves more than 50 million customers worldwide. Cpng is on track to reach $30 billion in gross merchandise volume, GMV, this year, and recently announced plans to expand into the US market. This makes Cpng one of the most exciting and potentially profitable investments in Druckenmiller's portfolio. The stock has performed strongly in recent months and currently trades around $119. Cpng Inc. has rallied quite a bit from its 2022 low point, gaining 93% since May 9th. And that could be just the beginning of the fastest growing South Korean e-commerce company. Cpng is not only growing customers at a steady rate, 7% in Q3, but boosting the revenue derived from each customer at an average greater rate, 19%. The company is still losing money, but its margins are improving quickly, which could push it to profitability before long. So, those were Stanley Druckenmiller's top 5 stock holdings. As you can see, all of these stocks have strong fundamentals and are expected to continue their upward trajectory. However, it's important to note that these stocks may not be suitable for everyone, and investors should always conduct their own research before making any investment decisions. That's all for today's video. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more videos just like this. See you in the next one.